There's a number sitting inside a government computer right now with your name on it. Not the number being paid into your account every 4 weeks. A different number. A larger number, the number you were actually supposed to receive. And the gap between those two figures, that quiet difference that nobody from the DWP has ever written to explain, has been draining out of your retirement every single week. Possibly for years. Possibly since the very first day you claimed. If you were born before 1960, I want you to treat the next 10 minutes like the most important financial conversation you have had since you stopped working. Because what I am about to show you is not a loophole. It is not a benefit top-up you have to apply for. It is money that belongs to you by law. Money that was calculated incorrectly. And money that will keep disappearing every week until you personally do something about it. The DWP will not call you. They will not write to you. The system generated a number. The system pays you that number. And the system considers its job done. What happens after that is entirely your problem. Most people never find out. The ones who do find out are the ones who go looking. And once they look, what they find changes everything. Let me tell you about Margaret. Margaret is 74 years old, and she worked for 31 years as a school administrator in Yorkshire. She retired in 2017, started receiving her state pension, and every 4 weeks a payment arrived in her account. She assumed it was correct. She had worked her whole life. She had paid in. And the government had calculated her entitlement. That is how she believed the system worked. Her son works in accountancy. Last Christmas, sitting at the kitchen table after dinner, he asked her almost as an afterthought whether she had ever actually checked her national insurance record. She had not. She had never thought to. He pulled it up on the official UK government website in under 3 minutes. What he found made them both go quiet. 6 years between 1984 and 1991 were showing as either gaps or not full qualifying years. Margaret had been working full-time throughout every single one of those years. She had old payslips in a box in her bedroom. They contacted Her Majesty's Revenue and Customs in January. By April, her state pension had increased by £31 a week. She also received a backdated lump sum covering the entire period since she first claimed. That was nearly 6 years of underpayment, paid back in a single transfer. Margaret sat at that same kitchen table and cried. Not because she was grateful, because she thought about every week it had been wrong. And nobody had told her. Margaret's story is not unusual. It is ordinary. The reason it keeps happening is the same every time. And it comes down to one thing. The data that determines your state pension payment goes back decades. For people who worked through the 1970s, 1980s, and 1990s. That data was recorded on paper. Employers submitted returns by hand. HMRC processed them manually. And in a system that was processing millions of records from thousands of employers every single year, errors happened constantly. A transposed digit in a national insurance number meant a year of contributions landed on someone else's record. An employer who went out of business before filing corrections left gaps that were never resolved. A woman who changed her name after marriage found that HMRC's systems failed to match her pre-marriage and post-marriage contribution history. The technology of the era could not keep up with the volume. And the errors were baked into the records and never corrected. Every qualifying year that is missing from your national insurance record costs you approximately £6.89 every single week. That sounds manageable until you multiply it. One missing year is £358 less every year, over a 20-year retirement. That single gap has cost you more than £7,000, and most people who have gaps do not have one. They have 3 or 4 or 5. The numbers compound into something that changes what retirement actually looks like. Now, I want to add a second layer to this. Because for women born before the 6th of April, 1953, there is a completely separate problem that has nothing to do with employer records at all. This one was caused entirely by the DWP's own computer systems. and it affected hundreds of thousands of women for years before anyone caught it. Married women and widows who retired before April 2016 were legally entitled to have their state pension uplifted based on their husband's national insurance record. The computers were supposed to do this automatically when the husband reached state pension age. In tens of thousands of cases, they did not. The system simply failed to apply the uplift and continued paying the lower amount indefinitely. Between January 2021 and March 2025, the DWP identified over 130,000 underpayments, totaling more than £800 million. The average correction for a married woman was around £5,500. For widows, it was over 11,000. This was not a fringe problem. It was systemic failure at enormous scale. And many of the women affected are still waiting because they do not know they need to ask. The DWP's correction exercise runs until March 2027. After that, the formal review closes. If you are a woman whose husband reached state pension age before the 17th of March 2008, you need to ring the pension service on 0800-7310469 and ask them directly whether an uplift based on your husband's record has ever been applied to your pension. Do not assume it has been done. Do not wait for a letter. Call and ask the question. For everyone else, here is exactly what to do. The first step is to go to gov.uk and log into your personal tax account. Once you are in, navigate to your national insurance record. You will see every tax year going back to when you first started working. And each year will be marked either as a full qualifying year or as not full. Go through that list carefully. You are not looking for anything complicated. You are looking for any year marked as not full, where you know from memory or from documents that you were working and earning above the threshold, a gap where there should not be one. An incomplete year during a period you remember as continuous employment. If you find even one year that looks wrong, you have just found money that was quietly removed from your pension calculation without your knowledge or consent. The second step is to gather your evidence. The most useful documents are your P60 forms, which are the end-of-year tax summaries your employer was legally required to give you, showing your total earnings and the national insurance deducted. Old payslips serve the same purpose. If you no longer have payslips, bank statements from the period showing consistent salary payments from the same employer will support your case. You do not need a complete archive going back 40 years. 2 or 3 years of documentation from the period in question is enough to open a correction. Start with what you have in the house and work from there. The third step, the one that actually moves money from the system into your account, is to contact HMRC's National Insurance Contributions Office on 03-00200-3500. When you call, explain which specific years you believe are recorded incorrectly, why you believe they are wrong, and that you have evidence of employment during that period with national insurance deducted. Send copies of your documents, never originals. HMRC is then required by law to investigate. If they confirm the error, they update the record and notify the DWP, who will recalculate your state pension going forward and issue any backdated underpayment as a lump sum. If the employer no longer exists, HMRC can still investigate using their own payroll records from that period. Having documentation makes the process faster. But the absence of an employer does not close the case. One thing I want to be honest with you about: the window to act is not legally closed. There is no hard deadline that stops HMRC from correcting genuine errors regardless of when they occurred. But there is a practical window, and it narrows every single year. The documents that prove what happened in 1986 are sitting somewhere right now. Maybe in a folder in the spare room, maybe in a box in the loft, maybe with a family member who does not know what they are worth. Every year that passes is another year in which those documents get lost in a house move, damaged in a leak, or thrown out during a clearance. The legal right to correct the record is permanent. The practical ability to prove what the record should say is not. Margaret found her payslips in a shoebox. They were slightly water damaged, but still readable. If she had waited another 3 or 4 years, her son told her, they might not have been. The 6 years of underpayment she recovered depended entirely on a shoebox that survived 25 years in a bedroom. That is the only thing standing between what happened to her and what still happens to people who never check. Log into your personal tax account on the official UK government website today and look at your national insurance record before you do anything else. If something looks wrong, get your documents together and call HMRC on 0300 203 500. If you are a woman who retired before April 2016 and your husband received his state pension before March 2008, call the pension service on 0800 731 0469 and ask the question directly. The correction exercise closes in 2027. The people who recover what they are owed are the ones who make those calls. If you know someone born before 1960 who is receiving the state pension right now, send them this video before you close it. One share takes 10 seconds. If their record has even one missing year, finding it could put more than £350 a year back into their account permanently, money that has been leaving every single week while the system said nothing,